Alrighty, so I thought it'd be good if we started with going through your white paper, and yeah, if you want to just carry the conversation through the first couple phases, I would probably just guide some of the questions and ask you some things that I thought of if that works with you. Start off
Sure,
there. Cool.
sounds good. So basically what the Reaper does is it is exactly what the name says, is we inflate our supply by 1% every month, never more than 1%, and we use that to sell onto the market. Whatever we generate in income from that sale, 97% of that sale goes towards buying and destroying other cryptocurrency supply, which is voted on by our holders. So essentially that enables them to influence other tokens price and to protect their own investments if they've been in tokens that are undervalued. And then it causes multiple trading events in that token. It causes a pump and sometimes it causes a dump, and then it will equalize to a value that is somewhere in between. And that is healthy for the market because that volatility is tradable, and that volatility allows price discovery for those tokens with a lower supply.
So when I first heard about this project, I had never heard of anything even doing something similar to this. A lot of the Ethereum based projects, when I look over on different blockchains, it's always a copy of something on Ethereum. Have you seen anyone doing something similar to this, or as far as you know, is this unique?
No, this is unique, and this is my original idea, really, with some input from my co-founders. And basically, what we're doing is we're disrupting the most disruptive technology in the past 2 decades. So
I like
most of
that.
cryptocurrency is, yeah, they're really stuck on their ways, and they've developed a mindset that because Bitcoin is this way or
Something on
Satoshi did it
Ethereum.
that way. Um, they think that that's the way it has to be, and we're doing it at a more creative way, and we're doing things that no one else has done.
Yeah, no, when I first heard about this project, I was extremely impressed on how unique it was. Can you kind of go through, because I haven't heard you talk about this, how you came up with the idea and like what made you even like what were the starting phases of thinking of this concept?
So I was thinking of this all the way back in 2017 with the last bull cycle, and I was thinking of how the bear market that follows really hurts the overall adoption of cryptocurrency, and how it's not realistic that a 4-year bull bear cycle would be taken over basically for hypocryptization. At some point, we have to break out of that cycle because that can't control the global economy. It can't control pricing of retail items. That's just not realistic. So I thought about ways to protect value, and I thought about all the different burns that go on. And at that time, it was just a few tokens that were doing self-burning, such as BNB or a few of the others out there. And reduction of supply is just a healthy thing for the market. And then it was really, I think it was Ready Player One that sparked this idea for me, was when I saw the metaverse and how much junk would be out there, and how do you get rid of all that infinite amount of junk that's coming into existence and it just doesn't die. And then I really started to think about the idea, and Venezuela over printing their currency, and things that could actually save them would be, the US Treasury coming along, buying $1 trillion worth of their currency and simply destroying it. That's not going to happen because, that's not the way the Treasury does business. But there's an opportunity to put death into the financial universe in a way that helps keep the system healthy.
Hmm. And I'm sure we're going to be talking about this plenty later, but that also is part of your proposition, not only going after the various crypto projects, but actually tackling other kinds of assets such as stocks, different currencies, debt, and stuff like that, which we'll touch on more of later. But when I first heard about this project, I was really thinking, wow, this is a really cool idea for cryptocurrencies, and you can burn the supply, but this concept can really be applied to so many different places. And I still don't have the vision of how you do that through decentralized APIs and stuff, but I know that's kind of the second half, and the first half is just getting there and solving that problem. And like I said, one of the reasons why I was so interested in this project is because it was fascinating to me how everything in this, a lot of the stuff in the blockchain ecosystem is copycats. So it was really refreshing to see a project like this on the XRPL that was unique. So how did you go about choosing the XRPL? Because I've always been a fan of the XRPL, but it doesn't seem like we necessarily always attract the best developers. This is one of the best and most unique projects I've seen.
Yeah, so the XRP ledger is really the fastest, the cheapest transaction fees, and I would argue it's simply the best. I have many complaints I could make about Ethereum and Bitcoin as a platform, and I think most people watching this already know those shortcomings. But I'm not a person who came into this thinking that crypto is perfect the way it is. I see problems and I see solutions. And the XRP ledger provides, at least a 50% solution, and the other 50% is the way that we are doing things creatively to implement and use that system.
Yeah. So I had a question, and I haven't heard you answer this. Is it possible to reap a project out of existence? Could you theoretically kill a project through reaping?
Theoretically, yes, there's ways it could be done if there was a project that had so much for sale on the sell book that buying it up and destroying it would leave so little and so little demand that essentially it would just fall off the face planet and be gone. But the reality is what we do is we place a very large buy order at market price, and then it's gone forever. So it's the same as if a whale came along and purchased $100,000 of a project and held forever.
Mm-hmm.
So if people having absolute faith in a project is something that could kill it, then that's a project that should die.
Yeah, no, I agree with you. And it seems like the more value that flows into the Reaper project, and the more your reapings will be able to have an effect on the underlying price. That does make a very interesting proposition, especially for if you did have something that the community seemed as like a threat or something that we didn't want around. It is interesting how there are a lot of different applications in which the community can use the Reaper. And something that I thought was very cool, this is once again later in the white paper, but the idea that you can kind of get into a voting model in which everyone wins, and you can have really use the Reaper for your own benefit and how you want to use it, and it doesn't necessarily have to always be the most popular choice.
Yeah, absolutely. So that'll be in phase 3, where every single Reaper token will count for a Reaper vote. And that'll make it so that one person taking risk does not affect another Reaper holder's risk.
Yeah. I'm just checking out the questions real quick. I was wondering if you wanted to probably move on to phase 2, talk
Uh,
about. Cool.
So in phase 2, basically what we're going to do is we're going to split our reaping funds. It'll still be no more than 1% inflation per month, but as our price supports, we're going to go down to 50% of that being for the reaping model, same as before, split 97% and 3%. That 3% is our operating fee, basically. The other half of the reaping sales will be used to purchase interest-bearing cryptocurrency. So what we're doing initially is we're going to do XRP with 45%. We're going to do stable coins with 45%, and we're going to do 10% in Nexo, because we're using the Nexo platform, and that maximizes returns. So that gives us an average return of 14.16% APY. And what we'll do is every single post reaping, basically after we sell the tokens, we'll be distributing the interest from that account, which we'll call a drip. That interest gets paid proportionate to your Reaper holdings. So we're incentivizing buying up those sales of the 1%. And then what it does is every single time we do a reaping and we add to that account, there is more money bearing more interest. So we've enabled it so that whatever you hold for Reaper now is never going to be as worth as much as what you hold for Reaper a year from now, because there will always be more money put into that account that bears more interest.
Yeah, so a couple things there. The first thing would be just to break this down for my viewers. So the 50% that will be going into the different yield sources, that is derived from the value created when a reaping occurs. Is that correct?
That's correct.
Cool. And then that amount that is being invested in these different places, that is essentially almost like an actively managed fund that is supporting the value of the Reaper kind of on the back end as a project. So it's almost like another income source for the project, but it also isn't only benefiting like a lot of traditional business does, where it only benefits the founders and the company itself, but it's actually helping the whole community because you're seeing the rewards.
Exactly. So it'll be basically a managed hedge fund, which pays a dividend to Reaper holders. And then we will also be getting pay that dividend as a company based on our own Reaper holdings, which is less than 30% of the circulating supply or the total supply. And then what that does is it creates passive income that's going to continue to not necessarily compound, but it will snowball.
Yeah, no, that's really cool. And it looks like you guys are actually looking out on the legal side of all this, because just the other day it looks like we're moving away from the fact that different kinds of staked rewards on small amounts of income being airdropped to holders. It looks like that will not be a taxable event, and it looks like it's going to ending up on the sell side. And then there was also another IRS case in which it kind of favored the fact that most of the transactions are going to be happening once it's sold. So I'd imagine this was all not massive, but just good news to hear, to see that we're kind of moving away from the idea that every single movement of a cryptocurrency is a taxable transaction.
Yes, and there's a recent bill being introduced by Delbene, Soto, and Emmer, and that's going to basically mean that everything less than $200 for a crypto transaction is not going to be taxable. So for all of the smaller dividend payments out there for people initially, that won't be a problem. And most people don't think this way, but once you're paying capital gains tax, that's a good problem to have.
Yeah, no, I agree. And it's not like this is one of those things where I feel like it wouldn't be like an impact necessarily your project, but it's an impact of the whole blockchain ecosystem. Because as a user of blockchain, like I don't want to be worried about every single time I get a staking reward, like where do I have to file this? Do I have to record it? What steps do I have to take? I mean, it gets to be a lot. So it honestly is really good to see the government actually, for once, doing something that's slightly beneficial. And it does make me a little more hopeful for what's coming down the road, because you'd think they'd be starting more aggressive than kind of giving us the benefit of the doubt. So that's one of the things that I did like to see, and it just made me think the way you kind of have this set up, that did fall into place pretty nicely for you. And I guess it's just one less thing that you have to worry about, because I'm sure there's constantly a lot going on over there.
Yeah, so there was some I don't want to say foreknowledge, but there were some good indications that that was the way the government was headed, and we planned for that sort of thing. We planned for the SEC versus Ripple Labs case and how that might affect the company. In which, if the SEC does win against Ripple Labs, then XRP becomes for accredited investors only. And what we would be able to do in that circumstance is, because we're investing as an accredited investor in XRP as a hedge fund, we would be able to custody that and still give our customers the benefits of that XRP. versus if the SEC loses, then it's still good for us. So either way, we found an avenue for success.
So Patrick, you seem like a guy who's always one step ahead. Would you consider yourself someone who's constantly planning and looking at different scenarios?
You could say that, yes.
That's the impression I got from you very early with watching some of the interviews, and that's why I know I sent you some of those questions I wanted to talk to you about. But
Yeah.
one of the reasons why I really wanted to talk to you about a lot of that stuff is because you're a guy who I can tell really thinks about the stuff he says beforehand. So that's why I thought a lot of it would be a really cool conversation to have. Back to the actively managed accounts, is that going to be something that is strictly taken care of by the Reaper team? Is that something that voters can vote on eventually? And if it is something that's being taken care of by you, does that require any kind of regulatory setup on your side? Because I would assume there would be some stuff there.
There is some regulatory setup on our side. So let me find the exact rule here, and it is under the SEC Section 4 Alpha 2 exemption, which is basically we would be getting an exemption until clarity in the crypto space is found. And then after that, we would be able to shape our business model around the new guidance, as it were. Despite posting up our opinion on the SEC versus Ripple Labs case and the property rights of cryptocurrency, we are not anti-SEC per se, though we think they've perhaps acted in bad faith. However, there is a space for regulatory guidance in cryptocurrency. We just want to see that be equitable regulatory guidance for all companies.
Yeah, and I completely agree. It's something I tell my viewers all the time. It's like we should want the regulators to come in because it only validates the asset class we're all invested in. I mean, I've watched tons of interviews of larger investors saying, I want to put my my client's money here, but I can't do it because there's no regulations in this industry. So no one should be. We're looking for soft touch regulations that are going to allow us to expand and allow innovation to grow here. But we shouldn't be negative on regulations. And I think it's fair to say the government's going to get a lot wrong, and there's going to be a lot of stuff that they're going to have to go back and fix. But I've been telling my viewers at this point, we just need to take a step because right now we're in this purgatory place where no one knows what they're allowed to do. And it's easier just to pick up your bags and go somewhere else than it is to just look to a regulator and say, even if we don't want to do it this way, we'll make a workaround if we can make this project work. And we're just not even at the point where we can even talk about the workarounds or talk about what is the starting ground. So I think it's really important that we get some of these regulations, but when you have the SEC coming in and saying something that's fundamentally not a security is a security, that's a tough starting ground because you're starting in the absence of logic. There's no logic behind that decision, so it's hard to carry that conversation going forward.
Yeah, and the key challenge really for businesses in adapting a cryptocurrency and launching it is that the SEC requires for a security that you have a prospectus, which is basically that's your breakdown of your company's financials that would be mailed to every single investor out there. The SEC is still thinking that we're on that snail mail 1933 system, and that's just not the reality. So that's got to change, and they will adjust guidance, I have no doubt. And it will just be something as simple as moving to, okay, our prospectus is posted online for all investors to see. This is where they get it, and we don't necessarily have to inform them by mailing it to them. And that's really all that's required as far as getting over that short-term securities hump. And it's a lot of regulatory and bureaucratic entanglement.
Yeah, I couldn't imagine. Yeah,
Yeah.
one of the funniest things I see right now is just the other day, Gary Gensler in an interview, he says your exchange might have, if you have 5,000 tokens, some of them might be securities. It's like, yeah, you've said that about 50 times now, but can we get any indication of what might make it qualify as a security? because the biggest ICO in the ever is not a security, and then the one company who didn't do an ICO you're claiming is a security. So I mean, it really shows they need to, and I think it has to do with the fact that if they don't create regulations, it's a money-making machine. They can go after whoever they want. So there's no incentive for them to clear anything up, because the second they clear things up, they lose power. So I think that
Yeah.
could be a large part of it.
Which is why it's a great thing. We're now seeing congressional bills. We saw Wendy Rogers' bill out of Arizona to recognize Bitcoin as legal tender. And we're seeing the executive order, which I think will probably be more of a positive than a negative, although I doubt it will be very clear. But
I tend to agree with you there. And I was even saying with that executive order, I mean, I honestly even think, even if it was negative for the crypto industry, at least you're going to fire up investor bases outside of just the XRP community. Because it seems like right now it's really just us and maybe those people who are dying for a Bitcoin spot ETF kind of getting on the SEC's back. But if there really is something that fires up a large majority of the cryptocurrency community, I think DC is very quickly going to catch on that they don't have as much power on this issue and they can't manipulate people as easily as they do on other issues. People in the cryptocurrency industry are very educated, and they're not going to sit there and listen to a politician convince them why crypto is suddenly bad. People are going to vote him out of office no matter what the party is. And I see a lot of people I personally know very quickly switching party lines on certain states simply to put someone in office who's going to be beneficial to cryptocurrency. And I think politicians are going to figure out that their base isn't as strong as they think they are when they're going against topics like crypto that people are passionate about.
yeah, and I imagine any politician saying that Bitcoin is bad is pretty much like taking a cyanide pill for their campaign. So,
Yeah, no, I agree. So let's go back to phase three though, and I think we covered phase two to a pretty good amount. But let's jump into phase three, because this is kind of where, in my opinion, things really start to get pretty exciting here.
yep. So phase three is where every single vote is going to count. So instead of, just the winner of the vote gets reaped, what it will do is that the reaping funds will be dropped into an account that gets distributed via API in relative amounts to your RPR holdings. So regardless of which token you vote for, your RPR will cause a reaping of a certain amount of that token. And with that, we'll be able to basically take off the reins on what is eligible for reaping, because you'll be able to recoup losses if, say, you've been in a rug pull and that you're the only person left on the planet holding that token. You could just go and set some sell orders and vote for your own token to be reaped.
And so, if you could just explain that a little bit. So, say I was rug pulled, and at this point, just so people understand, currently in the Reaper voting, it's essentially the Reaper project will propose the top qualified projects to be reaped, and then those will be voted on, and the number one selected one will have the reaping event. Phase three is essentially what will be happening is no matter what you vote for, even if it doesn't win, you will have the opportunity to reap that project. Is that essentially correct? Yeah.
Yeah, so
So, yeah.
basically everything would win. Everything voted on would get reaped. So it wouldn't be so much of a vote as it would be an allocation of your percentage of the reaping funds.
Yeah, and you're saying if you were in a project that was rug pulled, obviously you're not going to have a lot of the community all voting on your side to make that the REAP project, because to be honest, they probably don't care that much that you are rug pulled. But what you could
Yeah.
do is then you could reap that token, and by destroying the underlying supply, would you say that the value of that token would likely increase, and therefore you could recoup a lot of your losses?
Yeah, it may not even increase, but you could at the very least put your sell orders at the bottom of the book and get paid out that way.
Yeah, no, that's a really good point actually. I wasn't even thinking about that. So, when would this require a lot of what you're saying with the integrated APIs, that sounds like it would probably require some level of smart contract. Is that correct?
Yes, it will require some level of smart contract and layer two. I do expect that as soon as the SEC versus Ripple Labs case ends here, I expect we'll see smart contracts on the XRP ledger, because I do know that they're already operating out there in some banks. So that will be more available. And then essentially at that point, we'll have a dedicated API team that you'll submit your requests to. It may take a few days, and then we'll be able to set up the smart contract to automatically reap or burn that token.
So do you think this could be something that's possible to be done on something like a federated sidechain?
Yeah, that's definitely possible as far as the smart contracts.
Cool. Yeah, no, just because it seems like there's a lot of functionality that we didn't have before coming to the XRP ledger. So I'd imagine this would be a pretty exciting time to be an XRPL project because there really is a lot of features coming to your ability that you could probably even expand on ideas that aren't necessarily completely material yet. With the addition of smart contracts, I mean, I would imagine you could do all kinds of stuff, even possibly some sort of level of DeFi with the RPR token itself. I don't know if that has you have many plans for that.
So really, we prefer not to do the DeFi. We're sticking to the drip model, which is honestly better than DeFi. Most DeFis work in a situation where you have a diminishing supply being paid out to the token holders, and then that supply is paid out in the same currency as the original, and then it's completely up to the market how that's priced. So, for example, Songbird. I got like 1,000 tokens 6 months ago for probably $800. They're worth about $100 now, and I've increased the supply by 15%. That's
Mm.
not really a working passive income model. So what we're doing is we're paying out in XRP, not in RPR for the drip. So as long as XRP is publicly tradable, the drip will be a airdropped amount of XRP. That way they're not selling it into our books. They can buy into our books to get more XRP dripped. And that becomes as I said before, it snowballs. So that's a passive income model that actually works.
Yeah, no, that's very interesting too because first of all, I didn't really realize you were paying the drip in XRP. That actually is super cool and unique, and I do like that. And I do appreciate how many different avenues you guys took to try to make this project more unique. Because, like I said, a lot of the crypto industry is copycat. It's like one person said we need to do DeFi with staking, and every single other project said, "All right, DeFi with staking. That's what we're doing." So I really do like the fact that you guys have this other model and clearly it hasn't launched yet, so there's no way for me to actually be like this method is better. But I think it's important that we're exploring these different methods because unless projects like you're doing are trying to push the boundaries on what can be done, we're never going to know. And I think it says a lot because typically what I've seen in this industry is first movers tend to be benefited to a large degree. And it shows if you guys are pushing into these new avenues and you guys will probably end up with copycats yourself, most of the value typically does tend to remain in the top project. So I do really appreciate how many different ways you guys are willing to kind of push the boundaries and do stuff like this, where rather than having, well, every other project might have been, all right, let's set up a staking pool. We'll stake and you'll get some RPR on the side. And by the time a year is over, we promised you 100% returns. And now your returns are down to 3% and our token dropped 60% in value. So that $50 a week you're getting is now 25 cents. And I think that's kind of what you were alluding to with the
Yeah.
Songbird thing. Yeah,
Yeah,
that.
exactly. And we are the very first in the market doing what we do, in more ways than one. Pretty much all of our model, all 5 phases are completely original. And then with that, imitation is the highest form of flattery. So I do expect those imitators out there, but trust is the core of currency, and I don't think many of them will be able to burn hundreds of thousands of dollars and not be on the take somewhere. So we'll see, but they'll come.
Yeah, and like you said, the whole trust thing. One of the other parts outside of the unique aspect of your project was the people you have behind it. And typically when I'm looking through a project and I click over to the About Us section on the website, you could get, usually it's not the best looking site on the whole website. A lot of the times it's 3 question marks and you're like, oh, who are these jokers? But you guys have one of the best teams I've seen on a project your size by a mile. You guys are extremely transparent. You have people who have real industry experience on your board. I don't know his name, but that guy who recently came, what was he, CTO of,
For you.
yeah, with the Palo Alto guy.
Yeah, he's a CTO for Palo Alto, a great guy and a great personal story and history, and somebody, just to plug him for a minute, Fadi was a guy that was actually on death row in Iraq for refusing fealty to Saddam Hussein.
Oh wow.
And so this is somebody who understands integrity, and he understands cybersecurity, obviously being a CTO for Palo Alto. And I don't bring people on my board that don't have a heavy hit, and he's a heavy hitter, as are the rest of them.
Yeah, no, and I would imagine, first of all, I mean, that says a lot to someone like that's integrity and what kind of person they are. But I could also imagine having someone like that on your board who has real industry experience and working at a massive firm. I'm sure the knowledge he brings to your project goes a long way. And I mean, a lot of people don't know a lot of what a board is to do is really to train the management under it and kind of show them the ropes on, because it's a lot different running a small startup than it is running a company that has millions to billions of dollars behind it. So I'd imagine it's great to have him there and help walk you through a lot of this process.
Yeah, exactly. I know most crypto startups, if you look at it, the Ethereum with Vitalik, or you look at, Justin Sun or some of these other people out there, they got big fast, and they weren't really prepared for it. They weren't at the level of professionalism to be a multi-billion-dollar company. And that's why my board is people who have 20 years of experience in the executive levels, and every one of them is able to help shape me to be prepared for what this company is going to become.
Yeah, no, and it's an extremely impressive board, and just in terms of the confidence that gives a newer investor or someone to get involved in this project, I mean, it goes a long way. A lot of people don't take the time to go look who's actually behind the project, but I mean, that's really how you get rugged. And if you're not paying attention to a lot of these things, people can make some pretty crazy promises and white papers and tell you they're going to do stuff. But if they don't have their reputation out there, if they're not willing to put their reputation behind the project, I mean, you can really say anything. So the fact that you guys have all these extremely unique ideas, you're acting on them, you got the product out there very quickly from when I first saw this come up. And then the fact that you guys have an outstanding board who are willing to all get behind it. I mean, it shows a lot about the credibility of the project. It's not all just say we're going to do this, we're going to do this. There's a lot of material behind it, and then that's just important and something I always try to push on my channel. I'm like, look, you can drop me a million different coins in the comments section. Have I seen this? I've seen this. If I go to their website and it's a bunch of question marks in the developers, and I find out it's a 15-year-old in his bedroom running the project, I mean, there's only so much you can get behind. And that's just critical. So I was really happy to see that board of executives, and yeah, that's awesome.
Thank you.
Yeah, so I guess if there's anything else you want to say about phase three, uh, you can go ahead, or we can talk about phase four. It's up to you.
We can cut in a phase four, which is really my favorite.
No, I would love to.
Yeah.
Yeah. Yeah, no, yeah. Take it away, and then I'll jump in with the questions.
Yeah, sure. So phase four, what we're trying to do is basically, before you're able to vote on tokens out there, anything tokenized, to go and reap that token. Phase four, what we're going to do is make a user-friendly interface to put in basically your account number, your routing number, and it'll do a credit verification to ensure that it's a legitimate debt. and you'll be able to represent your debt as a token on the blockchain, and you'll be able to send your percentage of the reaping funds to pay that debt. And that doesn't just enable, payment of debt like your mortgage, your student loans, your car, medical bills, whatever that is, which is great by itself, but it also enables safe leverage. And by that, I mean that if I were to have a million Reaper token and that was my percentage of the whole was say 1%. And for example, let's say that there's $100 million generated on the 1% sale in a month.
Yeah.
I get 1% of that, which is $1 million, which goes towards paying whatever debts I have put into the system. So if I were to go and take a loan out for $1 million, I could pay that debt the same month. And then now I have $2 million and debt is non-taxable. So kind of what I'm getting at there is I'm re-envisioning the entire economic system, because right now, as you know, we have $30 trillion in Federal Reserve debt. Imagine if the government could only borrow what was represented by the money coming into the system by GDP and by growth. And it could only borrow that because that's the money coming in to pay, for example, a reaping that is then redistributed to pay debts. So you can actually manage the amount of money that is available to basically a country as a credit rating of this is what the country owns in Reaper token. This is how much the country can afford based on the expansion of its own GDP. And this is how much they'll be able to pay off of their own debt going forward. So that really gets a little bit into phase 5, but it goes from basic things like paying off your student loans or paying off your mortgage, and it really snowballs from there into it can grow to pay off very large debts.
Yeah, no, and that was very well said. But just to break it down a little simpler for the people who are watching, so I think if a very easy example is, say I had a car payment and I had some debt on my car payment. I think what you're proposing here is essentially, since I was already a Reaper holder and I was voting for the reapings, I would now have the option to integrate my debt through an API. And essentially, are you saying that I would be able to reap my own debt on my car payment?
Exactly. So you would be able to vote for your own custom API you put in, which is your car, and you're reaping that debt, and you're going to be able to pay that off much sooner. And then it's the way we should want the economy to be is the ability to pay debts without necessarily implementing labor. And one of the reasons that's really important, and this is something my chairman of my board, Sean Riley, my oldest brother, talks about in his TED Talks, is automation and automated systems coming into play in the next 50 years. I'm not a huge fan of, I forget the candidate's name, but he ran based on UBI and I forget, but he was talking about the way we're basically going to lose the majority of our jobs to automation in the next 50 years. And I think that's probably accurate, that computers are going to replace labor. So we need a different system for people to be able to generate wealth, which is, debt is a form of wealth, because every time you take a loan from the bank, that money comes into existence.
And it's an
And
asset
then
too, even if it's a negative asset, regardless of what you think, it's an asset, it's an instrument.
exactly. And then you would be able to pay off that asset, which becomes wealth accumulation. And that means you could essentially have an income flow with the drips and the debt payments without having to have labor or work involved in the economy necessarily at all, except for where there's demand for it.
Yeah, no, that's actually crazy, because that shows very well how you could have your project expands to so many different aspects of the economy. And even though at its base level and what you're starting out is a crypto ecosystem project, I mean, the idea and concepts behind it aren't cryptocurrency specific. I mean, they can really leach into any forms of our current economy. And like you said, it transforms the way we look at certain assets. Because currently, the only way, I mean, there are ways to use debt in a positive light, but not like this. A lot of people use debt simply to pay off something longer. And that's a good way to use debt as an instrument in some ways, but there's very little other ways you can really use to leverage your debt. And I believe what you guys are proposing here is a very unique concept in how you can actually utilize your debt to your own benefit.
Exactly.
Yeah, no, that's really cool. And I would like to get into just briefly how it would be. So if I had a set amount of Reaper tokens, say I owned whatever 1% of the supply, and I was voting to pay off my own debt. So with the value being reaped, can you just talk about how the value of me putting my tokens out there for the vote, how that corresponds to the amount of value that would then come in from the reaping? Do you see what I'm saying?
Yep. So the reaping would be the increase of 1%, and that's divided up by the number of Saturdays in the month. So it might be 0.2 in one month or 0.25 in another month, and that gets sold throughout the month. And then the total proceeds of that are divided by Reaper tokens and distributed to the holdings of Reaper tokens. So if you owned 1 million, you would get, or 1%, you would get 1% of those Reaper funds going towards your vote.
So I think that means that if you were to get involved in Reaper now and you had a large degree of Reaper tokens now, then in the future, if they theoretically had a lot more value, then you would be able to use a larger pool of the value created by each reaping based on whatever you wanted that reaping to go towards. So it's almost like if you were able to envision a lot of this happening and working out in the future, you could set yourself up to be a very powerful person on the Reaper network, and you'd have a lot of control, a lot of individual control over what these reapings are used for, while right now it's more of a community-led initiative.
Exactly.
Yeah, no, that's it's kind of when I don't know if you kind of have these moments in crypto where you can talk about something for a long time, but it doesn't necessarily click on exactly why it's such a valuable proposition. A lot of stuff out there, there's a token for it, there's a blockchain, but you're just like do you need a token? And it was kind of that moment where what I explained 1 second ago, where I kind of went full circle, and I'm like, okay, this really does make sense here, and this is going to have, if executed properly, this is going to have a lot of value behind it. One thing I wanted to talk about, because I know this is something that can be difficult for people to get through their heads when you're talking about a project with an inflating supply. People always think inflation bad, I can't, it needs to deflate or the token's never going to go up. Can you explain to people, maybe start off like low level and just explain why that's inflation can be useful and is not always a bad thing?
Yeah, definitely. So, like I said, most of the crypto community is kind of stuck in their ways already. They think because that's the way it's always been done, that's the way it has to be done. There's no more than 21 million Bitcoin, so everyone else has to have a hard cap. That's not really always a good thing, because that hard cap makes you completely dependent on the larger market cycle. What our inflation does is it allows us to generate value with that inflation, and that value generated is traded to basically the tokens being reaped, and then those are removed from the ecosystem. So for example, on the first, we did treasury and it was 93,000 XRP. So you might be wondering who loses. So it's us spending 93,000 XRP on treasury, which is then sent into a black hole. So that's similar to us just pulling 93,000 out of the economy and pushing it out there to other users. So every single reaping or every Reaper token gets its value from basically the replacement of something else out there in the ecosystem. And that may sound like we're just absorbing the market, but you got to realize there's 20,000 cryptocurrencies out there and 98% of them are going to die. And you'll be happy that you had Reaper token because of its value of absorbing all those other tokens out there that, ended up being worthless at some point.
Yeah, so I think it's important for people to understand is I think what Patrick's really getting at here is the fact that there's going to be a lot of value that can flow into a unique proposition like this. And that doesn't necessarily going to be washed away by inflation. The fact is it is very likely that the inflation is going to be used in a mechanism that helps the project. So it's actually going to allow a lot more value to roll into the token because inflation is a fundamental reason on how this project works. Therefore, you can't always get in your head that inflation's a bad thing. And there's really a bunch of examples of inflation almost having no impact on a project. I mean, you look at something like Ethereum, it's been inflating its entire existence and it's gone up in price. And it's because there's been a lot of value on that ecosystem. As long as you're providing value, then you're bringing in a lot of backing and value to the project, and since you're backing it with the reapings, there's a lot of potential for that to easily outweigh the inflation.
Yeah, and I'd also add one of the reasons so many projects out there are not doing well is because they have no mechanism for earning income for the project. The only thing they have is their founders' tokens, and the only thing they can make money off of is selling those into you.
Yeah.
That's not really a good thing.
Mm-mm. No, and it's almost like, and people, and what they'll do is they'll say, oh, we're not inflating this project, but the founders have 50% of the supply and they sell it onto the market. And it's like, well, isn't that inflation? The same exact,
Exactly.
yeah, Yeah, no, I always thought that was kind of a funny concept. It's like, yeah, inflation. I mean, honestly, you'd argue that inflation is much more pointless in something like the Ethereum ecosystem than something like yours. I mean, that inflation is relatively just rewarding miners for a function that's not even that necessary to securing the network. But when you have something like
Exactly.
yours, it's fundamental to how the project works. So I mean, it's a mechanism that rather than being a negative, it's actually being used as a positive.
Yeah, and Ethereum is busy trying to fix all their mistakes to mimic XRP still, but that's neither here nor there.
Yeah, no, I mean, the funny thing about Ethereum is like, God, you have this network that barely even works, but it's a testament to how much people like developing on it because they're still there.
Yeah.
So that's what I always say. I'm like, God, I wish Ethereum would like, there would be like a switch or something because I hold ETH and it's just like, I'm not selling it because it's performed well, but like at the same time, it's hard for me to be really excited about it. I'm like, this network's garbage.
Yeah, I totally agree. I mean, Ethereum will survive into the future. I just think that its use case will probably be constricted out of retail and more to like a corporate or government function with its smart contracts. It doesn't have a lot of practical use case in retail just because it's so expensive with the gas fees. And eventually, if XRP adds smart contracts after this case is done, which it will, it's going to be game over because most of those retail projects are just going to migrate to the XRP ledger.
Oh, I completely agree. And I saw the whole burning fees for Ethereum as almost like their step towards saying, all right, we need to do something to keep our token value up because I don't know if utility with inflation is going to be enough now to be driving this token based on the fact that there's just a lot of better blockchains coming out. Now, I do not think the Ethereum blockchain is going anywhere. I think it's probably going to live on as almost something, and this might not be a great example, but almost the way we see things like Python, like coding languages, kind of like the first ones are always around and there's always going to be people who want to use them. They're always going to have value, and it doesn't mean like Ethereum's like going to go away instantly, but there's going to be better things that pop up that are way better suited for what Ethereum always wanted to be.
Exactly. And Ethereum, it's not necessarily to hit on them, but they've always been adjusting their model to fix things that are broken every single step of the way.
Oh yeah, no, I mean, It's honestly, my mind is blown how strong the community who wants to develop on it really is. And it does show that it is the place to be. It's the standard for development right now. And it's amazing that with all the issues they've had with hacks and problems and bugs and the insane gas fees, that people do still stick around. And I think it does show that. And the other thing that's a real testament to that is how many blockchains we see now that are integrating the Ethereum EVM, because they're literally just saying, like, we're not going to come up with our own thing. Like, people are going to pick Ethereum either way. So if we can use the Ethereum EVM and then have low gas fees and these different things, it's going to be easy to get the developers over here and migrate over here. So that's always something I like personally in a project. I don't like projects that are trying to say, like, we're going to reinvent the wheel, we're going to be better than Ethereum, come over here and relearn everything. I mean, XRPL or Ripple said they're going to build the first federated sidechain to incorporate the Ethereum EVM, and obviously Flare is doing a lot to incorporate the EVM as well. And I think this is just a great way of showing you don't always have to be an expert in everything and create your own system. Sometimes it's easier to pick where the market has said they enjoy this subset of a thing, and then say, how do we incorporate that into our project and make it better?
Exactly. And Ether has a market share, and that's what it really boils down to is until someone comes along that can take that market share, it's not going to matter if the project is better, if it's a better blockchain, it's going to matter how much adoption they get. And that adoption is only going to come from being radically better. You can't be just a little bit better.
No, I agree. And to jump on something actually pretty different, but I don't think we talked about this, stocks. So I believe you guys have a proposition to burn the supply of stocks. Is that true?
Yes, as stocks become tokenized, and I do see that the SEC has approved a Boston
Yep.
exchange, which is going to be a blockchain integrated exchange. As that's tokenized, we'll be able to buy and burn stocks. Of course, there's going to be some legalities with that we'll have to examine. It may be in the form of, okay, you can't burn this company's stock, so we'd have to just put it in a dead wallet, intentionally lost forever, something of that nature. But that will come in the future.
Cool. Yeah, no. And I actually got started in a lot of this through traditional investing and through stocks and stuff. And it very quickly, I was pretty early in the Tesla community, and I very quickly saw something being built very similar in the XRP community, whereas like you had this tremendous value proposition that the market just couldn't realize. And that very quickly put me down the rabbit hole of like, wow, there is a lot here that not a lot of people understand. And that's very quickly how I was able to get involved here. But seeing the idea, I mean, if you don't know a lot about stocks, I mean, typically you have companies that will buy back their stock, but the problem is they can just always reissue more stock whenever they want, raise debt, and it's almost like they have unlimited control over the supply of their own stock. So it would be very cool if you had another mechanism to essentially come in and take shares off the market. So if you did have a company that, say, just diluted shareholders a massive amount, created a massive amount of stock, you could vote to actually reap a lot of that stock off the market, and it would increase your holdings in the company.
Exactly.
Yeah, no, I thought that was pretty interesting, and that would be a mechanism that the stock, I mean, completely new, that completely changes the way the stock market works.
It's going to change business because if you consider that holding a certain percentage of the stock can give you ownership over the company in a publicly traded company, there'll be millionaires and billionaires that look at reaping as a way to covertly do a hostile takeover. I'm not saying that's good or bad, but that the tool will be there.
Yeah, no, and then that's kind of something I find extremely interesting about this project, and something I alluded to kind of in the beginning. There's a lot of different ways you can use this tool, and I think right now with me and even you, who probably has a very high level idea of a lot of different scenarios, it's almost impossible to see all the different places this can go. And I've seen interviews with David Schwartz even allude to this idea. It's like, yeah, we're building the best infrastructure for payments the world has ever seen. Do we know how that's going to be used? No, not exactly. Like, we have to see how the market develops it. But the fact that we can already see a lot of these different avenues right now, I think shows that there's a big value proposition, and there's going to be things we can't see right now that could be even bigger than some of the stuff we're talking about.
Yeah, for sure. I knew when I launched this company that there would be unintended consequences, and I think I'm an unintended consequence of XRP. So
Yeah.
but it's just bound to happen.
Yeah, one thing I wanted to get your perspective on, and this is something that I haven't seen anyone talk about. Do you know about the mirror protocol on Luna?
I am not familiar with.
Okay, so it's a pretty easy concept. Essentially, what they do is they'll have a token and say we're going to tokenize Tesla stock. It tracks the value of Tesla, but there's no underlying change in supply. It's mirroring the price. The SEC clearly did not like this at all, and that's a big reason Luna is being investigated right now by the SEC. This is an example where I think regulation is necessary, because if you just have a bunch of tokens mirroring the price of different assets, I mean, markets are built on supply and demand. So that kind of kills the whole point in having a stock market, because if there's only one stock and everything's just mirroring that one stock, I mean, you really get away from the fundamental drivers of markets.
Yeah, I see significant issues with that. As far as mirroring, how do you determine that that token is suddenly worth the same value as the stock? And not only that, but if they were interchangeable, if they're actually trading out that stock for that token somewhere along the lines, that becomes a money laundering operation, which is it's something that we see a lot of. I know there's two companies on the XRP ledger right now that are money laundering operations, because essentially all they're doing is they're putting it in one pot. It becomes invisible. They wash it and it comes out the other side as a different pot. And that's just classic money laundering.
Care to share, or is that something we're not going to call out any names?
Not at this time.
All right. Well, if you ever want to break the news, you can come here and we can talk about it. One project here that
Sure.
I was a little worried about actually was the Xquake project, but I saw you, and it seems like on Twitter they've been extremely responsible, and that was one that I was very skeptical at first, and I was kind of almost like gladly surprised to see that they look like they're actually doing some really good things for the world. And it went from something that I was highly skeptical of very quickly being like, oh wow, these are really good guys. I wish I didn't go into it such a skeptic, but you really need to be a skeptic in this industry.
Yeah, I agree, and I was skeptical going into it, and then I talked to Mario and Antonio, and they are good guys, and I've deployed to the Philippines probably a dozen times, and I'm very familiar with the people there, and they're all very kind, big-hearted people in the Philippines, and I saw what some of the work they were doing there is, and I know that there's a significant need for it, so I totally support Xquake and have no reason not to no reason to doubt them at this time.
Yeah, no, and I really was like, when you're doing something like that, I mean, that's a place you really don't want to be scamming people. Like that's a bad look. So I think I was very relieved to see that. Yeah, they're a legitimate project and they are out there doing the right things. And it actually completely flips it, because now I actually do love what they're doing, and it's so great to see them helping people in the ways they're helping people. It was something I was skeptical at first, but it very quickly turned into, wow, like that's awesome. I love to see people using value to help people in the world that needs it, because there's a lot of that. And if you have legitimate people trying to solve problems like that, that's a great application. It's not necessarily going to be the biggest application of where blockchain is going to go, but it's a great way that it can be used to give back to people.
Yeah, and I just want to throw this out there for anyone that's considering donating to Xquake. From my time in the Philippines, I know that the average income there was about 2,000 Filipino pesos, which is roughly $16 US per month.
That's insane.
And the average healthcare from the socialized healthcare system was about $1.55 per citizen per year. So they need the help. So by all means, if you're considering, I endorse it.
Yeah, and not to instantly switch this back onto your project, but
Oh, you're fine.
one thing that you guys are proposing, and you mentioned this in the beginning, but you do have, I mean, I don't know specifically what's going on with the Philippine peso. I would imagine if it's anything like a lot of other countries out there, they probably have a significant inflation problem. I might be making that up, but the fact you do have a value proposition in which you could help some of these countries with inflationary problems, is that true?
Yeah, absolutely. We could help to stabilize inflation by essentially buying up their excess cash flow and destroying that cash flow. And that's something that's never been done before in the history of economics. And fiat, since it came into inception, has really been kind of like a unbacked, unlimited supply cryptocurrency that just inflates and inflates and inflates. And if you look at the M2 money supply, we jumped about 40% in the last 2 years for the US dollar.
Right.
So the only way to really solve that without collapsing the economy or without causing significant civil strife is to compensate for that excess funds in the economy. And we provide a tool where that will be possible to actually compensate and then destroy the excess funds without hurting anyone along the way.
Yeah, no, that's awesome. And it looks like we've been doing this for like an hour now. I was wondering if you wanted to offer any just closing thoughts. I mean, back to your white paper, anything else you think we didn't hit on that you would like to talk about? And then maybe for those of you who don't know, I actually gave Patrick some questions that I believed required a decent amount of thought. So I wanted to prep him a little bit because I wanted him to bring his best answers. And I'm going to be dropping those videos over the next week or two. And we're going to be talking about some of the more highly contested topics going on in the XRP community, speculating on some stuff with the SEC lawsuit. So we're going to record that afterwards, and I'll be dropping those videos later on. And that's going to be, I think, a lot of talk you guys are really going to enjoy. One of the reasons why I wanted to talk about this with Patrick is because I see a lot of interviews where people talk about this stuff, and a lot of their talk is very basic. I considered Patrick a pretty big brain guy. He likes to think things through. He doesn't just say the first most obvious answer on his mind. Everything goes with a lot of thought, and therefore these are questions I wanted to ask him because I think his opinion is going to be very valuable on it, and hopefully we can get some traction behind some of these videos and get a lot of other people interested in these topics. So Patrick, I'm going to give it to you if there's anything else you want to say about the white paper that we didn't talk about.
So the last thing I'll throw out there in regards to the drips, which is a phase 2, and it's hopefully coming very soon in Q2 here of fiscal year 22. What we're doing with hedging between XRP and the stable coins, or the dollar, if you will, is we're making it so that should XRP shoot the moon, the value of Reaper goes up because the value of the interest being paid out to Reaper holders goes up. Should XRP shit the bed, as it were, the value of XRP being purchased goes up, or the number being purchased goes up, and then it is still hedging against that volatility and dropping more XRP to our holders. So at this point, there's really two primary competitors for the global currency, and it's not the US dollar and it's not the yen, it's the US dollar and XRP. And not everyone realizes that, but that is the real life situation that we're in. And those are the two we're betting on, both horses, and one of them's going to win.
Yeah, no, I completely agree. I mean, just the other day, I saw something in the news that essentially Russia was going to open a direct, I think they're going to be settling oil payments, something in the East, in the euro instead of the US dollar. And I mean, I mean, I hate to say it, but the US has weaponized the dollar for such a long time to all these other countries. And I mean, it's only a matter of time before these countries stand up and say, look, we're not going to use a currency that is constantly being used against
Manipulate.
us. There really needs to be a neutral settlement currency because the way the world works right now, there's no trust. And when you have a neutral settlement currency, that every party can equally trust and get on, and no, look, we'll do what our currency what we will, you do what your currency what you will, but when it transfers in the middle, there's a neutral ground where everyone's on the same level playing field. I mean, that's just, it's something that will drastically increase the liquidity in the overall economy, and it's going to change the way I think a lot of we look at international payments and really the international monetary ecosystem going forward.
Yeah, absolutely.
Yeah. So yeah, guys, with that said, I think we are going to hop offline, and then I'll be releasing some very interesting clips hopefully for you guys throughout this week.
Thank you.
Yeah, awesome. Thank you guys for coming.